Okay, folks, welcome to Best Stock Charts for the coming week. This is Bob Desmond, and we are going to talk about a few stocks that made it to our watch list for the new trading week. We are changing our bias on this market from being bullish to turning somewhat bearish, so much so that we have begun adding to our short positions, and we plan on doing more in the coming week. And we'll continue to trade around our core position in the miners, gold mining, and silver. And we'll look to add to them when the time is right, but now's not the time. So let's talk about our week last week first. With regard to the aforementioned core positions, it was a rough week. We did sell covered calls on our NUGT position. They did expire worthless, so we did drive more cash flow into our portfolio. That's always good. We did open up a new round of covered calls. I want to use the word tranche. We opened up a new tranche of covered calls going out into next week. And if the shares rally, we'll manage that position to avoid the shares being called away. But if the shares pull back of NUGT, which I think that they will, we'll look to manage profits on the covered call side and look to book profits and reopen the covered call position if we do not see a nice healthy close on Monday or Tuesday at a lower strike price. Again, managing winners, closing out profitable covered call trades, moving the untested side of our trade, which of course is the covered call trade at current, lower, and we continue to generate cash flow. And I did mention on the week ahead commentary to members how we will lighten up on that trade if we break a certain support level. Members, if you're watching this, I'm going to go over, or I have gone over, the NUGT trade in great detail on the week ahead commentary, so please go check it out. What else did we do last week? We shorted Tesla. And I had a number of reasons as to why I wanted to short Tesla. But I think I go over it in best detail on our market wrap, which I sent out to premium members on Monday evening. And here's what I had to say about Tesla before we went short. Leaving off with Tesla, what a day here. We have RSI at 90.60. A lot of hot money chasing this stock. And even shrugged off the accelerator issues that are in the news. We have the third standard deviation Bollinger Band pierced. We closed above it. Big volume, man. Let's take a look at an intraday chart. We'll go with let's start with a 4-hour and drill down here. Very extended on a 4-hour basis with RSI 88.98. I hope they spike this higher tomorrow. Big volume. 2-hour chart. RSI 91.43 on a 2-hour basis. This is just a short's wet dream right now. No new daily high this final 2-hour bar. So I wonder whether or not we're topping out here a little bit of stalling action. But I get the feeling, look at this chart, they're going to drive it up one more time. 1-hour chart, shrugged off a bearish reversal bar, but never did put in a new daily high after that. Back to histogram, beginning to lose momentum on a 1-hour basis. Let's finish off here with a 15-minute chart. Potential double top here. If we break down below 735.20, you probably see algos begin to lean into the short side. If we fail to take out the highs of today, negative divergence on ultimate oscillator, 15-minute basis. But Stokes are hooking up. I think they're going to spike this up higher again. So expect an alert on Tesla tomorrow as a potential short, and we'll be using the put options. I may use a put spread, which means that I will sell a deep out of the money put option to help finance an at the money put option. So it caps your profit potential. However, you're financing the trade with another put option. So it's just a way to offset the risk. And that's it for tonight, folks. Everybody have a great night, and I will talk to you tomorrow. Be well. So I made that video here after the close on the 3rd. And I mentioned in that commentary that I predicted that we would see the shares move up higher yet again. And sure enough, they did. The longs handed us a basket of money. It was a trade that we could not ignore. They spiked it up higher to a ridiculous level. We had RSI on a daily basis, which peaked out at around 93, I believe. Around 93.6. We closed the 3rd out above the 3rd standard deviation Bollinger Band. They spiked it up yet again on the 4th. So we had extreme overbought levels on RSI daily basis and Bollinger Band's daily basis. And not to mention, when you take a look at a weekly chart, on a weekly basis, we have RSI at 91.62. We're rolling over on Stokes. We were screaming above the 3rd standard deviation Bollinger Band on a weekly basis. This could not be ignored. This was an unsustainable rally. And to ignore the short side was ridiculous. We had to jump in, and we did. So the game plan was that in the heat of battle, when they were surging the shares up higher on the 4th, we opened up a put position. We bought the 900 strike price expiring on the 14th of February for $81 per share. Later, as they continued to drive the shares up higher to nosebleed levels, we added to that position. Let's drill down to a 30-minute chart. We added to that position here, and we paid $77.30. So our basis cost for this trade was $79.15 per contract. And almost immediately after we added to the position, the shares dropped about $100 per share. And then the next day, it was just the floodgates of selling opened up on Tesla. And I predicted that we would probably fill the gap here. And that wasn't necessarily the reason why we booked profits. We booked profits at $112 per contract. That was a $36.85 per contract profit, or a percentage return of 46.5% within around 12 hours. So a very, very nice trade. So I expected that they would try to rally the shares back. I didn't want to stay too long to the short side and be all too greedy. I knew there was going to be a counter trend move back. These types of rallies don't die easy. You're still going to have a lot of hot money out there believing that they're going to buy the dip here. There's no buying the dip anymore, folks. This rally is over, because when you go back to the weekly chart, you could see we still closed right at the 3rd standard deviation Bollinger Band. We still have RSI at 91.62. This is ridiculous. So we'll be eyeballing the daily chart of Tesla to take advantage of a new round of buying, and we will look to lean into the short side yet again if they do spike the shares up higher. So, members, more to come on that trade. Let's talk about positions that we're looking to put on this coming week. I'm just going to do a cursory overview here. Members, I've already done a deep dive into all of these charts using multi-time frame analysis to identify where we have historical support levels and where we might want to enter these trades. So go check it out on the week ahead commentary posted in the members area. All right, so first one up, Salt. I spoke about this one last week on Best Stock Charts. I mentioned that it hadn't hit our price target, that it was not time to buy, despite the fact we had RSI so low. It was not low enough. I still think that we're going to go lower here. We broke down below a key support level at 3.52. We do have support levels below that we are eyeballing. And again, members, I did discuss our price target on the week ahead commentary, so go check it out. RSI remains at 17.52. You'd have to remember, folks, single-digit stocks can easily see RSI sub 10. So please be very, very careful here. Just because we have RSI that's oversold and Stokes, which are quote-unquote oversold, does not mean you want to go jumping in and buying these shares. You need to know where historical support is. That way you have traders of like mind entering the trade with you. I'll add to my commentary that you're continuing to see Big down volume bars. You don't want to fight these guys. This is not mom and pop selling 100 shares out of their IRA. These are institutions selling money. Remember, the Baltic Dry Sea Index is rolling over. The next chart up, Cassie Pharmaceuticals. This is another extreme oversold stock with RSI at current 13.97. Guess what? We can go lower here. It hasn't hit our price target yet. Might we see a trade sideways, thus alleviating the oversold condition relative to the Bollinger Bands? Sure. Then we're going lower. Remember, single-digit stocks can easily see RSI sub 10. That's what we're looking for. Your stochastics, while they're trading down below 20, they're rolling over. You don't want to see this on a stock. It means that we can go considerably lower, but the counter-trend rally, normally when you get this, is vicious to the upside. Now, I haven't checked out the number of shorts in this name, and that could be a catalyst for an upward move, so we'll definitely be checking that out prior to entering the trade. The next chart up, and again, members, I did go over the multi-time frame analysis of CASI on the weekend commentary. Again, it's in the members area. The next chart up, GLOP Gas Log Partners. I did a little bit of research on this. I'm looking for ongoing concern issues here. This is how vicious this thing has been beaten up. So as I speak about this stock, I have not completed my due diligence. So just because the technicals are looking attractive to me does not mean I'm definitely going into any of these trades at current. They're just possibilities. More research needs to be performed. And I may be long of one or two of them already for disclosure purposes, but none of the oversold ones. Now on GLOP, we have RSI at 6.18. Stokes are still flattening out here. They're at 3.61, very oversold. We are leaning into the third standard deviation Bollinger Band, or in the neighborhood of doing so. Volume is still very high. So the probability of a continuation move lower is very good. Again, you need to know where you have your historical support levels to find buyers of like mind to enter the trade long with you, so that your odds of profitability are much greater than buying not knowing where historical support is. So members, more to come here. And again, multi-time frame analysis on the weekend commentary posted in the members area. TZA. Let's update this chart. To begin this commentary, we're going to talk about the monthly view. This is how I enter or qualify trades that I'm looking to put on as really big directional bets. And I want to take a look at where we're at on a monthly basis to see whether or not there are any glimmers of hope that we may be seeing a bottom. And while not plentiful, we are beginning to see some glimmers of light. So what's the first one? We do not have a new monthly low versus January, despite the fact that you've had the S&P 500, the Dow Jones put in new all-time highs this past week. The small caps have been lagging and lagged again last week. And the TZA puts you 3 times short of the small caps. So we're seeing some price stability here. And I go over in great detail in the weekend commentary with members the ways that we could enter this trade and where we would need to keep a stop loss should the trade go against us. So members, go check it out in the members area. So TZA on deck as a potential long as we move into the new trading week. The next chart up that we're going to discuss is a weekly chart of the S Qqq. This leveraged ETF puts you short of the triple Qs, which have been amazingly strong. Now, the historical research I've done on the triple Qs has led me to the conclusion that this current price level is unsustainable. Let's go to a chart of the triple Qs right now. Here is a daily chart of the triple Qs. You saw a filled candlestick, which is a sign of indecision on the 5th. No follow through to the upside on the 6th. That was a stagnant day. So you saw some stalling action. Then on Friday, we began to give way, and we are very close to the 3rd standard deviation Bollinger Band and the 2 standard deviation Bollinger Band. Not enough for you? Well, what you really need to focus on more than anything else is the spread between the 50-period moving average and where we closed out on Friday. We have never, in the past 10-odd years, been this extended beyond the 50-period moving average. Does that mean that the triple Qs are going to crash? No. Does it mean that in all probability, remember, we're using statistics here, in all probability, are we going to get a brutal correction in the fairly short term? Yes. At current, we are 1, 2, 3, 4, 5, 6. We're about 7 bars extended away from the 50-period moving average. The worst I think I've seen was 4 bars extended over the course of the past 10, 15 years. Very, very extended here, folks. Beware of this ETF. I think it is going lower. Can it move higher on Monday and embarrass me? Of course. It happens all the time, but it will roll over fairly soon. And that's why we are attracted to the S Qqq. And admittedly, the weekly chart of the S Qqq does not give me the warm and fuzzies whatsoever. And volume was horrible. But it's the daily chart that has me a little bit more optimistic on this short ETF. And I went over that with members on the week ahead commentary. Again, members, please go check that out. And with that, folks, I'm going to say everybody have a great Saturday night. And tomorrow night, I will be doing a webinar with TrendSpider. So please join us there tomorrow night. It's free. I believe it's at 6 p.m. Eastern Standard Time. And everybody enjoy the remainder of your weekend. And thanks for joining in. Be well.